and myself, Peter. So Gavin was just doing a seminar for various people. I don't know whether it's public or not. I think it was public, doing live trading, but I'm not sure if he took any trades. I wasn't watching it. However, I'll hand you now straight over to Mr. Tom Williams. Tom?
Hi everybody, Tom Williams here, speaking to you from Worthing, nice little resort town on the south coast of England. It's sitting right on the English Channel. Of course, if you're French, it's called the French Channel, but here we are anyway, and it's slap bang in the middle of winter. It's raining, there's floods everywhere, not here, but further to the west of us apparently. And anyway, Gavin held us up slightly here, so we're sorry for that slight delay. Now we have here the daily chart of the S&P 500. As I said before, this is a very, very important index because this is where the equity lies. This is where the value of the market lies. Remember, the future is a derivative, and everything else are derivatives, really, of this market. So if this market says going up, then it goes up. If it says it's going to fall, it'll fall. Now, daily charts are not always easy to read, but sometimes, lo and behold, as we've seen in the past, suddenly it is. Right? And we have a beautiful example of here. Now that, where the cursor is at the moment, is a test. Now you don't often see a test in this S&P 500 like that. It's a very, very clear test, look. And there's even an automatic signal there. Test after shakeout, which is about right. Okay, we are oversold. That is, we're way below the lower trend line. You're vulnerable here for some professional groups thinking, oh, we can take this up a few points, which apparently it's gone up today, and they were right. But here is the test look. Now that was up to date to yesterday, which was Thursday, I'm afraid, because this is end of day. But the test was there, look. If you're fully aware of these tests, you could go long there, and you could be reaping big benefits by now. So it is there, look. The trouble is, these things seem, well, it's a daily chart, this. So you've got all day long to see that. I was going to say, you know, they come and go so quickly. But that is a test in anybody's language, right? You've got this mark down here, right, which the computer thinks is a bit of a shakeout, which is probably right. Bounces up a little bit, and then they test. And that test was the day before yesterday, Tuesday. No, Thursday. What day is that, Peter?
Wednesday.
Sorry about that, folks. Wednesday. Okay, now, whenever you see a bar like this and you're oversold, way below the trend lines, look, there they are, the trend lines, it's screaming out at you, look, there's no supply present. It's been marked down. The volume is low, look. It's even got an automatic signal appear. It closes near the high. That is a test in anybody's language. And if you burn that into your mind, when it happens again, you should be aware of that. You jump in, you go long. Okay? Now, we'll look at the intraday charts now, but is there any questions? Please, Rita's hovering over the screen here, reading any questions that come in. Is there any questions about that chart? No, Rita said nothing's come in yet. Okay, put up the, well, anyway, that if you probably all recognize that, don't you? You should do by now. But it's going to meet resistance when it gets up to that trend line. Look, that's a better view of it. Look. Rita's reading something. Put up the.
Would you wait till success or go long when tests are completed? That's it. Well, I don't understand it, so. Okay, you've got a question here. Would you wait till success or go long when the test bar is completed?
Yeah, you can't fail that because that's a daily chart. You've got all the time in the world to see that happening. It's definitely a test. As soon as you see that, you know that market's going to go up. You know that as sure as the sun's going to come up tomorrow morning, and you go long on that. They don't often see these tests so clear as that. But when they come, boy, can you make some money on that. Professional money certainly did. Okay. Put up the, what did I have, 15 minutes? Right, now, this is a 15-minute chart. Now, there's no reason why you could put any of these time frames up. Right, they're all much the same. Well, within it now. I was watching this. Peter's watching this too. Now, I don't care how clever you are or how good a trader you are or who you are, you can have a job to live through that. That was about an hour before the US market opened. Just do that, look. Now, I don't care who you are, you're going to have a job to live through that. Right. And you tell me that this market's not manipulated after looking at that. So what they did, they rammed it up, right, first, clear all the stops out and everything above the market, then they rammed it down, did the same at the lower end of the market. Right. Now that's really why it's advisable to not be in them. Well, it was an hour before it opened, so you can have a problem there. Now on one of these charts, what time frame is this, Pete? 15. There was a test immediately after that.
Yeah, 5 minutes. I looked at it afterwards. I missed it. Go back to here. Hang on,
Okay. Oh, there it is. There it is. Now, look, I know it's easy in hindsight. You go back and look at this stuff, and it's so obvious. Now, don't forget, you've got that test on the previous day on the daily chart. So you knew this market was ready to go up, despite what they're doing here, right? You know that market was strong because of the action on that daily chart. Now here, okay, fair enough, right? But here's a test, look. It's a down bar, narrow spread, closed near the high, and the volume is very low. And there's an automatic signal to help you as well, which is telling you loud and clear, this is a test. You ignore the signals at your peril. Right, and then the market sees that. They already know it's strong anyway. Widespread up, look. to lock as many people in or out of the market as possible. Naturally, it hits a bit of supply and starts going sideways. But look, down bars, red down bar, very low volume, that's going up. Sorry. Right, we hit some supply here though. Oh, that's when the market opened, look. Right, markets don't like ultra high volume on these up bars. Now don't forget they whipsaw this around, there's an up thrust, look. That is a true up thrust. It not only looks like an up thrust, it tastes like an up thrust, feels like an up thrust, and it's has occurred after a sign of weakness there. So that is a true up thrust, look. Now, these rules were written 10, 12 at least years ago. After this particular rule, any of these rules haven't been changed, and they still come up, look, trumps. Why? Because this is how the market works. This is it. This is the easy way to read the market. It's like reading Braille, but you've got to stick to the rules. An upthrust, a true upthrust, occurs after you've seen a sign of weakness. And there's the weakness, look. There. There's even a signal up there, look. Supply. Okay, fair enough. So it falls off. And then bang. That's marked up deliberately to mislead as many traders as possible. Sorry, I've lost it now. Where's it gone? Back. Oh, there it is. It's updating live. Okay, so that's an upthrust. Now, please burn that into your memory. And then when it occurs again, now sometimes it may not occur as quickly as that. It may occur long here somewhere, but the principle will be there. Now, are there any questions, please, about this?
Yes, Bruce is asking on this chart, would Tom short the upthrust or wait for a no demand?
No, when you see the rabbit, you've got to shoot it. Don't mess around. I mean, it's all very well, all this cautious stuff, wait for this, wait for that. Right. But no, I mean, it's there, look. As soon as I saw an upthrust, Rita was unfortunately working. She's in such demand with these solicitors around Worthing. It's a job to fit it all in for her. But she would have shorted that straight away. And, but I know it's easy in hindsight to see all this stuff. And this stuff can come and go if you're not paying attention and only see it in hindsight. But it's there, look. If you can master that somehow, that's what these alerts are supposed to be doing that Gavitt sends out. And we send 1 or 2 out to alert people that something like this is happening. That is a true setup. If you were writing a book, that's what you use as an example of an upthrust. Supply hitting the market and an upthrust.
Also, Tom, I look out for weakness in supply.
Yeah.
I was just saying to Tom, I wasn't watching at this time. I saw it afterwards. I was, I think I was hoovering or something. There was a weakness here, and it comes off, but then it goes up. But it goes up on no demand. So you might think, well, it's still weak. And then, just to prove the point, it goes up further and collapses onto the low again. So 1, 2, 3 points of weakness, if you like, and it's moved up. So, as we say, if the market's moved somewhere, it's possibly at some point going to move the other way. And so if you see weakness after a move up, 2 signs, 3 signs, then as Tom said, maybe it's time to short. So That's how it all works.
Tina's saying at the 320 bar looks like an upthrust. Is that an upthrust, Tom? 1520. One before. One before. Is that an upthrust, Tom? Yeah. It's in the wrong.
Yeah, you see, you need to nail down this terminology. Now that down the bottom is not really an upthrust. All right. Why isn't it? Because there's no weakness immediately in the background. An upthrust, the terminology tells you that, as Peter just pointed out, not only was there a bit of no demand on the previous bar to that upthrust, the professional money know perfectly well what they're doing. They mark it up. It's been marked up because you can see there's no demand there. And then they heap it up, catch as many stops as possible. But it's a true upthrust because of the weakness. Look. 1, 2, 3, 4 bars previously, look. Or even 5 bars, look, or 6 bars. There's high volume on these up bars. Markets don't like these high volume and up bars. And here there's even signals telling you so, and it's closing in the middle. Look, this is true weakness. And then bang, the professional one is fully aware of this. They know perfectly well the market's weak. Why do you think they ram it up like that, catch the stops and mislead as many people as possible? But once the market's falling, this isn't really an upthrust as such, though it may vaguely look like one. It's probably what we call a weak bar. Okay?
More questions?
Andrew is saying, on my charts, the H stops would have meant that you exited at the entry point.
Well, between you and me, I never look at the H stops. I don't look at all that stuff. I like to fire from the hip, as they say. The principles are so obvious as they occur, but you stick to what you feel happy with. That's the main thing. I mean, the H stops, to be quite honest, I had them put in years ago, and they were really a copy from a system by Drummond, apparently, but they are. But I never look at that stuff. I mean, it's so obvious. Why should I bother with all that when you can see it so clear? That is an upthrust. Burn that in your memory, whatever you do. Burn the test in your memory and burn these upthrusts.
More questions?
GR is saying he's confused. We're saying daily is on get in on a test, but then there's an upthrust on the 5 minute. So when in daily, I expect to stay in for a few days, but the 5 minute chart says get out on an upthrust. Well, it doesn't say get out. What happens if you're depends what you're trading. If you're trading daily, a daily chart, then obviously you're going to stay in, as you say, for days. You wouldn't be looking at a 5 minute chart because obviously in the day that it goes up and down and all around the place. But the next day, if you've seen a test, then you can look. What often I might do is if I see a test in the daily chart, the next day I'll be looking for signs of strength if I was to stay in for the whole day to get in. But a lot of people just do scalping. They do short time frames. Some people just go by an hourly chart, a 10 minute and a 5 minute. So it depends what time frames that you're following. A 5 minute is like a drop in the ocean if you're trading, daily or monthly. I think, does that answer it, Tom, or do you want to say something? Yeah, Tom wants to say.
Well, sorry, what was the question?
The question was, you've got a test in the daily, but then there's a sign of weakness in the 5-minute.
Well, in the meantime, you've gone long on the daily chart, right? And you're making money. That's all you're interested in, scalping. But don't forget, you see, it all depends. There's so many different ways to trade these markets. If you're a fund manager and you're looking for results over weeks and months or even years, you'd be looking at the weekly, monthly charts, wouldn't you? You wouldn't be looking at 5-minute charts. You'd be looking at the overall direction. If you look at the S&P 500 on a monthly chart, right, you can see it started to go up months and months ago. The principles are all there embedded in it. But what we tend to do, because it's a bit more exciting, I suppose, is scalping. You know, Rita likes to, and I do, and even Peter here, he likes to do a trade, be in 10 minutes, half an hour and off. It's sort of exciting. But doesn't mean to say you should. It all depends what strategy you're using. But when you see those tests on that daily chart, you know categorically that market's going to go up. Right? And then when you see these upthrusts like this, you know, but don't forget it's a short time frame. What we're looking at here, 15 minutes or something? 5 minutes. You know, what do you expect? 5 minutes. If you look at the 5-minute movements on a weekly or daily weekly chart, the live price hardly ever moves.
Okay, Krista says, I have no problem identifying the entry points, but what I find much more difficult is to exit the market. Do you use the VSA principles to exit too, or do you use any trade management techniques to exit?
Well, to be quite honest, I don't have any clever exit strategy. I definitely go long on a test or something like that. And don't forget, all the time the blue bars are blue, it's been held up, marked up deliberately and held up. And you could see the weakness coming in. I mean, as this chart here shows you, you could see the weakness initially coming in. Then it went sideways 2 or 3 bars, and you had your upthrust. But you saw the weakness coming in, so you don't want to be, it all depends what strategy you're using. But with that upthrust, look, the market's fallen. Okay. And here, look, there was some stopping volume. And there's a test there, look. It's not very clear, that must admit. But it's a red down bar, look, here. And relative to the previous volume, it's lowish. So that means that the supply that was apparent here with this high volume, look, has now been absorbed. And that must have been absorbed by the professional money. Once they see they've done that, then they can mark it up, look. These wide spreads up, look, that's a test there. Right, and there's supply up here, look. Again, look, it's again happened, but here there's no upthrust, look. Look how similar this is to that previous chart. Markets don't like ultra-high volume on these up bars once you've seen an up move, right? You will get what probably is no demand here. Here it is, look. It's trying to go up. I suppose you might call that, well, that's a weak bar, look. It's just going sideways at the moment. It's pacing its time. It doesn't know whether it wants to go up or down, or to me it looks as if it's trying to go sideways at the moment. It's Friday, So they're going to do their best to mislead you as much as possible. So that over the weekend, news, they never get it right. The people on TV and that, and newspapers, they take guesses at it. And they very rarely get it dead accurate.
All right, well, we're going to look at the 4-hour chart of the ES. This is the 4-hour chart. Pete, could you put a 50%? There's a question here from Peter. On the 4-hour chart, there is a 50% retracement at approximately 1790. What signs shall we expect to judge if it goes further up or it turns down? Yeah. Well, we're just drawing on the 50% retracement. Andrew's saying, what data feed are you using? For this chart, it's eSignal. Go to the right. It's not there. Oh, retracement. So GR, if I trade on the daily test, would you go to the 5-minute chart? No, that's correct. I go only down to a 60 or 30-minute chart. I am to go further down on the time when trading on the daily chart. I think not. Sorry, yeah. Okay. Yes, so so GR, I go only down to 60 or 30. I am to go further down on the time when trading on the day. No. So really, if you're trading daily, you see a test in a daily bar, you want to just stick to the daily chart, because otherwise, if you start seeing signs of weakness, I mean, during the day it whipsaws all over the place. So okay, next. Here you are, Tom.
So the question was, what signs shall we expect to judge if it goes further up or it turns down?
Well, right, with a 50% retracement, we're talking about what normally happens, right? And normally, a 50% retracement, it meets resistance. Now, don't ask me why. It's obviously something to do with human behavior. It usually meets resistance. And you can read that resistance within these charts, usually. Markets don't like this ultra-high volume on these up bars. Now, I know the market's opened here, but still up high, right? So it is hitting the 50% retracement here, which normally would be a resistance point. You could draw trend lines on here, Peter, 2 lows and a high. Right, in an up move, first 2 lows, the first high, that was traditionally Wyckoff stuff. Yeah, there, on that particular move. A bit of fiddling around. And you could see that on the retracement, look, right, it seems to hit it nicely. So there is definite resistance there at this 50% retracement. So it's quite right to note that. If it is going to come off, it'll come off now on that area there. But mind, you do have a widespread up here. Admittedly, the volume is very high, which markets don't like this ultra-high volume. But you have to now see how the market behaves on that volume. Is it going to test? If it's going to go up through that top line and the 50% retracement, which is probably unlikely, the market's going to test. You're going to see a red down bar. It'll be a narrow spread, close in the middle, and the volume will be low. That will be a test. Then you say, right, it's going to go up further. Professional money's looking at this stuff, and they're fully aware of what. But notice how these blue bars work. Now, whenever you see these blue bars like this, look, right, it's because the professional money is supporting the move. They can't lose control of that move. They'll have allow for one down bar, look, and that's on low volume, right? Which is interesting. Means that when you see those blue bars like that, the professional money behind that particular move, they're in control. And the worst thing that can happen to them is they can lose control of that. In other words, other groups coming in selling. And they don't like that. So they support the market vigorously. Okay.
AKRX. It's a stock. Okay, we've got a request here for AKRX, which is a stock. Yeah, what stock is it? Can you tell us?
Can't see it very well. Okay. So the overall picture is that. Yeah. 20.
It's called, it's Acorn.
Acorn.
With a K.
Well, look.
Don't tell me
Acorn stock, right, okay. I don't know much about it, but I can certainly try to read the chart. Okay, so the market falls quite happily here. There's not a great deal of stopping volume here, but there is a signal, which they say is a test, look. Okay, so it goes on up. The blue bar hits supply, look. Markets don't like that high volume on these up bars. So it comes back down and tests. And there is a test there. It looks as if that's trying to go up for the day. That's all I can tell you.
Okay, weekly. Can we put the weekly chart up of the same one, yeah? That's the weekly, Tom. Oh, yeah.
Yeah. Do you want to speak into the headset?
Now this is a weekly chart, so we.
Put more bars up.
Well, I can't see them if it's too many bars. I'm sorry. My eyesight's that bad, but a little bit of caution here, because that there, right, is increasing volume, but is that stopping volume? To me, it could be a weakness. When you see these wide spreads down close near the low on increasing volume, as it pushes back down, is very, very often spells lower prices. So we've got to be cagey here. Mine is a weekly chart, so there's quite a bit of time to get over that look. This looks as if it's trying to go up for the day anyway, to me.
It has so far, has it?
Michael's saying, what do we want to know about GAN's 50% 3-day cycle and time prediction? Of course, after ultra-high volume, we expect a reaction within 25 bars. Tom, have you got anything to comment?
I'm sorry, I don't go in for things like that. It sounds beautiful, though. What was the question again, Rita?
So what do we want to know about GAN's 50% 3-day cycle and time prediction? Of course, after ultra-high volume, we expect a reaction within 25 bars. He's saying, I think, keep it simple.
Well, keep it simple. You see, you can't judge this market on a mechanical, mathematical way. It just doesn't seem to work because you're dealing with human beings, how they behave. And that sounds of it's come from some study from a book or something somewhere. And although sometimes it may be right, but you'll find most of the time it's just confusing. You can see how easy the principles are to see once they appear. The big difficulty, if there is any difficulty, is catching them. You know, as Peter said, he was hoovering, so he missed one. And so it goes on. I suppose if you were running a professional office, you'd have so many people watching these markets, you wouldn't miss anything, which is probably what they do. But my experience is, don't try to be too clever. You're never going to beat this market in the way it works. It runs in a confusing manner deliberately. It's not there to help you, and it won't follow mechanical paths. I'll tell you that right now. So it may sound good if you read all that in a book or somewhere. It may sound great, but you try to follow it, and you're just kind of making life heavy for yourself. If you could recognize, and we've recognized, what, 3 principles today, very, very clear. And if you could burn those in your memory, they're going to happen again. They happen time after time. They, you know, almost every day you'll see something like that. Now, the beauty of these programs like this, it comes up with automatic signals. By the way, it's the only one in the world, I believe, that can do it. The beauty of it is that if you look at the signals and you think, oh, well, they're not bad, then if that is true, then what we've instructed the program to do must be accurate, because computers don't want to know. They don't want to know any flaws in your thinking or your knowledge or the information you've given to the programmer. Just not interested. You've either got it right or you haven't. And around that structure, you build your knowledge. It may be slightly confusing at first. There's so much information out there, various sorts, but a lot of it's misleading. Keep it simple.
Any questions?
Okay, please look at the euro daily and give your opinion, says Carlos. Euro daily. That's E.
Daily chart of the euro looks like that.
Well, the euro, as we looked at the moment, at first glance, it looks weak to me. Why does it look weak? Well, there's not a lot of stopping volume down here. There's a bit of a test there, look. and that's why it went up a few bars. But this is what we call a weak bar. It's been marked up, look, it's close in the middle, and the volume is low. And we've got this top behind us here, and we've got an upthrust there, look. There's an upthrust. No signal on it, but there's weakness there, look. That's an upthrust. Widespread down. I can't really see a lot of, it's bounced off that lower trend line, look. But to me, that bar looks weak. So I certainly wouldn't be interested in going long on that. That's the euro. Now we looked at, I was looking at silver yesterday. That looked weak. Can you put silver up? Continuous charts. Contracts. Now that's silver, look. Now to me, this is two weak bars right here, look. There was one yesterday and one today. Or one yesterday, sorry, one day before. It bounced up because we are over sold here. Right, they love trading this, if possible. But to me, that looks weak. And to me, that looks going to come off. That's silver. And gold is very similar looking as well.
Okay, question to Tom. When you worked at the private fund, did they pay attention to time cycles in the markets?
Time cycles, no. I'm afraid this is another clever build-up in some book or something somewhere. There's always cycles in everything we do. In the weather, time you go to eat a particular restaurant. If you chart it out, there's cycles. And the market's no different. But they were more practical. They knew that if they could remove what they called a floating supply off the market, then they could control that stock. And that's what they did. And they used to make a lot of money, I know, doing that. Because they've actually cornered the market, that particular stock. They've cornered it. And they can mark it out and do what they want with it if they've removed enough of what they call the floating supply. Because the only thing that could interfere with them is other traders that have shares say, oh, I'm going to sell now. I know that, but if they've removed the floating supply, those people are not there, they're not selling. Directors, for example, won't sell. Little old ladies with the bottom drawer, they're not selling, and so it goes on. Banks would like to keep the shares for loans and this type of thing, so they're not going to sell. Now, professional money know that. It takes time to do it, and that's why they have to have syndicates. That's why they have groups of people with money, because it takes such a lot of money to do that and skill. But it can be done. When I was working, there was alleged to be 300 syndicates throughout America doing that, and I believe it.
Okay, can we put up RPTP? It's Raptor Pharmaceuticals, an American pharmaceutical company. Can you analyze the daily chart, says Paul? RP, yeah, TP. So it says in the preceding webinar, Gavin mentioned seeing an opportunity in Raptor Pharmaceuticals. Yeah. What sort of opportunity did he see, Paul? I'll pass you over to Tom now. I'll let you know.
It's a pharmaceutical company, yes. I'm not too familiar with it, but I've had a glance at it. Look at how it's arching over. This mushroom shape. That's not a healthy sign for bullish moves. This rounding over shows that every time they mark it up, look, the caps are being sold off. And that's what causes that mushroom shape. That's not a good sign. And to select a stock, really, it should be acting stronger than the index, or as strong as the index. That's your main criteria when you want to judge a stock. Now this one is fairly strong, look, it hasn't fallen all that much. The reason why you look for stocks acting stronger than the index is that it means that the big trading houses that send out skilled experts delving into these companies, checking everything up about them, right? The reports have been good, and therefore the trading houses support that stock. And in practice means that when the index falls, those particular stocks are reluctant to fall or recover fairly quickly. And that's why we're looking for stocks that act stronger than the index or as strong. That be your main criteria. But at first glance at this stock, it's rounding over. That doesn't look healthy to me. Strong stocks don't look like mushrooms at the top there. Now, I don't know what Gavin said about this. I wasn't listening. Whether he said it was going up or down. There's nothing all that obvious to me at the moment.
Michael asks, the pivot point support at 14.5 is holding. So if I show you somewhere, saying there's a pivot point here. That's holding, he says.
Right. Well, they do work, 50% retracements. Now, why they work, I don't know, to be quite honest, but they are. We're not interested in all whys and wherefores of these things. We don't normally use any mathematical formula or anything that's more or less guaranteed to work, because nothing works in really practice, because you look at the human activity and they're about as reliable as the weather is in England at the moment. They come and go. But to me, that looks rounding over, and they could easily, I suppose, have an upthrust or something there and fall off.
Should we go back to the ES and look at the... there's a point here from Samuel. Are they supporting the ES so they can exit? So that's obviously that's on the daily, I suppose. Well, I don't know. I'm assuming it's about the daily. 15 minutes. So Samuel's saying, are they supporting the ES so they can exit, Tom?
Well, it's still holding its own, look, and it's still going up, and the bars are blue. You'll know when that top's been reached because you'll suddenly see the high volume coming in as they're selling. We haven't actually seen that, have we? Where is it? I can't see it. That's actually a red bar. That's a test, look. Volume's low. So it's no good wondering you say, right, okay, I know that when the top was reached here, we're going to see high volume and up bars, or an up bar. We haven't seen that yet. So they're trying to mark this up for Friday, by the look of it.
Okay. Right. Has anybody else got? Oh, NQ. That's the Nasdaq, isn't it? Have we got a Nasdaq? Doesn't say a time frame. We'll put the daily up, and unless you want a different time frame, just say daily is good. So this is the Nasdaq, Tom's.
Well, the Nasdaq will move with the S&P, roughly speaking. But here we can see, well, we saw that when the market fell there. There's a little bit of support came in, look. But the markets don't like this high volume on these blue up bars. So we've got a widespread down, which is a potential sign of weakness. We've got to be careful there. Again, there's high volume on this up bar, but then they tested, look, and the volume's actually low. That allowed the market to go up 2 bars. But that, to me, looks weak. Those bars going sideways don't look strong at all. And these wide spreads down. But this will move in harmony with the Dow Jones and the S&P 500. I mean, the Nasdaq, not an actual building with marble halls, it's a computer sitting on the ground somewhere. Yeah. Yeah, that's what they are. Well, to me, that looks like an upthrust there. Now, there's high volume. Right. High volume. Markets don't like that. Up bar and a narrow spread, look. Okay, so there's a warning signal there. Not a lot of selling pressure there, but allows it to stay up a little bit. But that there looks like a bit of an upthrust here, which isn't a good sign. But this market could easily go up a little bit here. But it's not going to go up in a bull move in any sort of way. There's weakness built in there.
So that was the Nasdaq futures weekly chart. Okay, folks, so that's it for this week. Thanks for coming along and listening. I hope you all got something out of it. We'll be doing the newsletter as usual on Sunday, probably. I think it is. Is that right? Yeah, everyone's nodding. And this has been recorded, so I'll put that up shortly. So with that, we'll say thank you again. And I believe Gavin's on later on the, I keep calling it the final bell. What's it called? The closing bell. The closing bell, which I think is in a, towards the closing bell. Funny enough. So tune in to Gavin on the same VSA Club link. All right. So with that, we'll say goodbye and we'll see you all next week.
Welcome to GoToWebinar.